I think we've got the management of Mphasis now joining us, and we can go across to them. They've reported a revenue decline for the third consecutive quarter. The decline was expected, but what they've reported is perhaps a little bit more of a drop as compared to what markets were expecting. Manish Dugar is Chief Financial Officer of the company, and he's joining us right now to take some questions. Manish, good morning. Good to have you with us here. Thanks very much. I'll get to margins in a bit, but let's just address that 3.5% quarter-on-quarter constant currency revenue decline. What caused it? I think both in the BFSI vertical and the logistics vertical, things have been a little weakish. What are you seeing in the marketplace?
This was not unexpected combination of the volatility in the banking space and the mortgage business because of what's happening in the interest rate were kind of anticipated. I think the more important thing for us is the strong deal wins that we had, $700 million of contract closures. Over the last few quarters, we had seen that origination was kind of going strong, resulting in pipeline growing. Conversion of that into contracts and then conversion of contracts into revenues is where the delay was. The good news is at least the contracting has started picking up. $700 million was the record quarter for us. And we have also started seeing those contracts starting to deliver revenue in quarter as well. So as we go forward, as the backlog that we have built over the last few quarters and the contract closures that we have had now starts converting to revenue, we feel confident that that should give us strong sequential growth in the coming quarters in the rest of the year.
Got it. Nitin Rakesh is also joining us, Managing Director and CEO of the company. Nitin, good morning. Great speaking with you here on CNBC TV 18. We don't get to chat that often, so good to see you. Just a quick word, Nitin, just to take off from what Manish said. Will we see improvement progressively from the second quarter onwards for the rest of the year? And how much of that is predicated on what's happening out there in the US, especially, say, for example, on the mortgage side of things? Talk us through that.
Thanks, Nigel. Thanks for having me. Great to talk to you. And I think, as Manish was mentioning, we've seen some green shoots in at least the opening up of the decision cycle as it comes to awarding those deals. And then, of course, we've seen some early signs where conversion to revenue is also starting to at least get visible. It's nowhere near where it needs to be from a normalcy standpoint. Specifically, I think the reason why we have called out for a base formation or a bottoming out in Q1 is linked to the fact that we've definitely seen some uptick in volumes on the mortgage side in some segments, especially home equity lines, diligence services, and increasingly in the due diligence space, as well as the capacity creation requests from customers as they expect these loans to start getting restructured. That definitely has, at least in our view, for now, put a line under the leakage that we had from the mortgage side of the business. I think the nature of the pipeline and the deal wins has also been fairly broad-based. So that gives us visibility into growth outside of top 10 and BFS. And that's the reason why we do believe that some early green shoots are visible. We do believe that growth will accelerate sequentially through the remainder of the year.
Okay, so early green shoots are visible and growth will accelerate for the remainder of the year. Nitin, hi, this is Sonia here. Thanks for joining us on the show. I have a couple of more questions on the BFSI segment, which has been hit this time. But before that, I wanted your thoughts on what happened with Mphasis. Not so much because they speak about a slowdown in discretionary demand, but also they're talking about how deals are getting delayed. Is that very company specific, you think, or is this something that the entire industry is facing? And if yes, what would the read-through be for a company like Mphasis?
So, Sonia, I think, again, I'm not qualified to comment on, what's going on in another business. But all I can tell you is we did call out the fact that if you look at the three stages of the life cycle of a deal, origination actually has been fairly robust. We have been adding new deals to the pipeline pretty much through the last 4 quarters, and hence every quarter the pipeline growth was sequentially higher. However, the TCV wins for us were fairly flattish in the 325 to 350 range. What we've definitely seen an uptick in is the pace of closing of those deals. Some of them were obviously in the pipe. Some of them were added recently. A third of the deals were also AI-led, which basically means that that's definitely something that clients are very keen to continue to implement and expand on. So I think green shoots basically are visible around BFSI. There are segments of banking where demand is actually a lot better. Consumer, wealth and asset. I think mortgage, as I mentioned, is starting to see some turnaround. But there are segments of banking where the demand just isn't, back to normal or won't be for a while because that's very dependent on the cyclicality of either the capital markets or the interest rate environment. So I think it's very nuanced, very specific to the domains you're operating in, very specific to the geographies you're operating in as well. We've seen good traction in Canada in the last quarter. That has added a 40 million plus deal for us, which is a big win for us in that region because we've been investing for the last 18 months in the region. We've seen good pickup in pipeline in Europe, but conversion is actually fairly slow. So I think it's definitely an industry-wide issue where you have seen slowness in decision-making and extreme tightness in existing spends and discretionary spends. So I think the scrutiny on discretionary spends or short-term spends has been really, really high. So I think that's definitely an industry-wide phenomenon.
Okay, that's an important takeaway for us, that it's not just Infosys related, but this slowdown in discretionary spends perhaps is an industry-wide phenomenon. Got that. Nitin, one more question, since you mentioned a lot about deals. The average large deal size in FY23 on the whole was around $60 million for your company, and that has doubled from where it stood about 3 years back. Just wanted to understand, where does it stand at in Q1 and what could it be for the rest of the year, the average deal size?
So I think, Sonia, there are 2 or 3 things that go into the size of a deal. Firstly, what is the service line? So we've done multi-tower deals. So we are not only doing, run, but we're bundling run and change. In many cases, there's ops transformation, or there is tech transformation, replatforming, cloud migration, or transformation included in there. So the nature of deals has become multi-tower, and definitely compared to 5 years ago or 3 years ago, the duration has definitely picked up for us because many of these deals require a 3 or 4 year transformation journey or a roadmap. But in the recent past, I think in the last 12 months, the durations held pretty steady, but just the number of deals has ticked up. This quarter, we had 4 deals over 100 million each, and that's definitely adding to the average deal size, so to speak. So I think very pleased with the fact that we are able to originate and close large deals, and they are actually across verticals, across client categories. We called out for the fact that significant proportion of the deals came from non-banking as well as non-top 10 customers. Of course, we did 2 large deals in banking as well this quarter, which is very, very heartening because that segment is really something that we are very extremely, of course, exposed to, but also looking for signs of a little bit more normalcy there. So I think very pleased with that performance. Very, very, looking forward to continuing to convert the pipeline that is also up at this point.
Nitin, this is Prashant here. And this is an unfair question, but I'm going to ask it. So up to you if you want to answer it. In another lifetime, you were also on the capital market side, a lifetime ago, actually. So I'm going to ask you to don that hat to tell us, for investors who are watching, with all that is going on in the US, uncertainty, there is, of course, throw in this AI mix as well, which gets talked about quite a bit nowadays. Is Indian IT a structural kind of story from where one will make money even from here?
I think you will definitely, again, I can't commit that I'll give you an unbiased answer because I'm invested in the sector and the segment. But having said that, this is not the first time we are seeing cyclical slowdown. This is not the first time we are seeing a tech pivot. We've seen that at least a couple of times just in the last 10 years, and we saw a pretty significant pivot starting 2000. So I think I have, of course, I'm part of the industry. I am very, very confident in the ability of our companies in the sector to continue to adopt and embrace tech and really stay meaningful to end customers. We have seen definitely massive investment being done by almost every large player, whether it was in the digital era, clouds, centric investments, and now, of course, AI-centric investments. And not to forget, we are also probably best placed on the planet as an industry to actually continue to give efficiency on both cost and productivity to our customers as well. So I think to me, this is a secular tailwind. We are definitely in a structural tech investing super cycle that will last not just 1 or 2 years, but potentially, as we call it, a decade for us to continue to play in.
Okay, that should be that's very confident sounding, and I think useful for investors to hear it from you. Thank you very much, both of you, for joining us, Nitin and Manish. Appreciate your time here on CNBC TV 18, and hope to speak with you more regularly as well, Nitin. Well.